Channels Go Crypto Investing, bell notification, like the channel, subscribe and share to get that education and information you need, most importantly, to fleece, heist, and shiest and walk away with all the fucking money and hit the pumps and miss the dumps and build up that nice structure that we're looking for, right? Got to have that nice structure with some trees. We got the nice, beautiful trees, right? See that? Got to build that structure, and that's what we're here for. And we had a really exciting day as a lot of things were going on. You can see the US dollar back here in February of 2023 peaked up here at about 110-ish dollars, 110 to 1115-ish. We hit a high up there, right? And then we collapsed down, right? We had a long consolidation, and now we've had a recent pump. See that? We've had a recent pump there. I want to change the color there. We had a recent pump, and since then we've had a nice little consolidation. And now the question's going to be, does this have a nice leg to the upside now after what the Fed just did? But what the Fed just did, and what I've been talking about since 2021, since the Fed started raising rates in 2021, we told you they started raising rates up. We told you 2022 the rates would continue, but by the end of 22, the beginning of 23 would be the last hike, right? We told you that, and now we had a pause, as they're calling it. They're going to hold pat with interest rates. That's why there's some volatility in the market today. Specifically, if we go into the cryptocurrency market, we can see the Bitcoin price in the year to date has actually been up this year. We started off very depressed down here below 20,000, and then we've had a steady consolidation in an up and down fashion to the upside. And recently we've had a long consolidation after we had about 110% pump from about 15K all the way up to about 31K, right? About 110% pump. Right now we've had a consolidation, and the question is, does Bitcoin make a charge to 40K? Or does Bitcoin go back down to 15K in a bear market consolidation? That's what we got to talk about, and that's what we got to try to figure out based on what's been going on in the market. The XRP price is also, for 2023, has been on a nice pump. We started the year out with a huge bull market going from about 34 cents all the way up to nearly about 42 cents in a quick span. Then we had a nice consolidation, a huge pump to the upside again, but it's slightly higher than here, but this could be construed as a mountain double top, and that's what we're trying to look at here if we go into the price action, as we've had a highly choppy consolidation pattern here. See this? Highly choppy consolidation pattern, and we've had after the big nice consolidation on the 200-day moving averages in the daily time frame, but if you look down here, we are in the hour time frame. We've had a series of the same thing. Step ladder up, we're taking the ladder up, then we take the elevator on a dump, about a 10% dump, right? Then we take the ladder up, then we have a huge dump, this time about a 15% dump, right? Then we take the choppy ladder up again, have a huge blow off top and an immediate reversal of 15%, and then another leg to the downside of about 8%, right? And that's what we've been doing recently. Now the question is, do we get supported here like we did once, twice? Do we make this a third time here and we have another hyper pump to the upside, and then try to figure out if we're going to continue up or having a quick dump the elevator down? That's what you got to watch out for. And if we take a look out here, and what the Fed did, and like what I was talking about with the Fed, we were saying they were gonna. I believe they're done raising rates, regardless of what inflation does, and I believe inflation is going to continue to go up. But I don't think the Fed will continue to fight inflation, because when they bailed the banks out a couple of months ago, when those big banks went under and they bailed depositors out, that was telling you they were done tightening, because you can't tighten as you're bailing banks out. That tightening and printing at the same time, bailing banks out, doesn't add up. It doesn't work together. It means you're not tightening, and that's adding a lot of volatility to the market now. But what I'm noticing here is you have a big top here and another big top here coming off a hyper pump, and then a dump, and then this consolidation where the moving averages were in the daily time frame. And then up here, what does that look like? An on-topping reversal pattern with the neckline down here, and or, as I call it, the mountain double top, a technical trading pattern where you got the sun in the background rising or setting in the mountain double top. And that's what we have to pay attention for here, because that could absolutely happen if you go out back into here and you go out into the daily time frame where I was trying to go before I got into a little rant. You can see that overall pattern that we were in here. We had the 1 year pattern where we had descending overhead resistance, uptrending underneath support, support once, support twice, 3 times, 4 times, overhead resistance once, twice, 3, and then a whole conglomerate. And we were getting bullish here where we thought this could break out and come up to the 51, the 48 to 51 cent level, right? And it did. Actually got up to about 56 cents and got harshly rejected. And this is what we're watching out for. These are the critical moving averages that we were just talking about that it bounced on and formed here. And now we're seeing if this can hit the next step to the upside, right? Because if we go and look at what happened today in the news, as I'm rambling on here, but you're just going to have to deal with it. The Federal Reserve today, the Federal Reserve released 2 p.m. Eastern Standard Time on the 14th of June 2023. The Federal Reserve had its meetings, and it says recent indicators suggest economic activity has continued to expand at a modest pace. Job gains have been robust in recent months, and the unemployment rate has remained low, which is good. And it's good for the Fed that it gives them hope and lets them gives them the data they need to continue doing whatever they feel like they want to do. Inflation remains elevated, obviously, right? We all understand inflation remains elevated. The U.S. banking system is sound and resilient. I would call bullshit on that. I would call bullshit on that, right? I call bullshit. A big steaming pile of bullshit is what I call that over there, right? What they're saying, tighter credit conditions for households and businesses are likely to weigh on economic activity, hiring, and inflation. The extent and the misconception here with inflation, there's only one source of inflation, and that is the United States government and the Federal Reserve. When the Federal Reserve prints money or monetizes government debt, that is inflation, right? And the effect of inflation is prices rising, right? The extent of, but they like to push blame on businesses, consumers, and wage increases as the cost of inflation or the cause of inflation. But inflation is expansion, inflating, and the only way you can do that is by creating more money. And only the United States government and Federal Reserve can create more money, right? The extent of these effects remain uncertain. The committee remains highly attentive to inflation risk. The committee seeks to achieve maximum employment and inflation at a rate of 2% over the longer run. In support of these goals, the committee decided to maintain target range for federal funds at 5 to 5.25%, holding the target range steady. This meeting allowing the committee to assess additional information and its implications for monetary policy and determining the extent of additional policy firming that may be appropriate to return the inflation rate, as they're still saying they're going to fight it to 2% over the long term. The committee affects economic activity and inflation and economic and financial developments. In addition, the mortgage-backed securities described in its provisions announced plans. The committee is strongly committed to retaining inflation to 2%. Objective and assurance the appropriate stance of monetary policy. The committee will continue to monitor the implications of incoming information of economic outlook. The committee would be prepared to adjust the committee's goal, accommodate a wide range and expectations in financial and international developments. Voting from minority parties of Jerome Powell and the scumbags and criminal gangsters and henchmen are all right here. If you're looking for names of the criminal gangsters that have infiltrated the United States trading market, I would go with the Fed chairman. Jerome Powell is one of them. Vice Chairman Michael Barr is another one of them. Janet Yellen, she's not on here, but all these people are all in the criminal gangster cartel. But you can see the Fed has held or paused the rate hike, and I think the rate hike is done. If we go into the consumer price index, one of the things they're talking about here is the inflation rate. Let's take a quick peek at the inflation rate. Next slide, please. What is this not going to open now? There we go. If we take a look at the inflation rate, we can see where I think we are right now is back here. I think we're in here from the 1970s into the 1980s, and that's where I think we're at now, where we had this first initial wave to the upside, and they started raising rates and fighting inflation, just like we had back here. And they fought inflation and called off the dogs in the mid to late 1970s too quick, right? They called off the dogs too quick because they seen inflation going down. They didn't understand what was actually happening. And then in the late 70s, we had the worst inflation we had ever seen. They had to come up with stagflation and hyperinflation talk going into 1980, right? And I believe we are somewhere right here right now. We're just coming in to where they paused rate hikes because they started lowering the rate of interest rate hikes, and you can see we're coming off the peak. And I believe if you extrapolated this for another year and a half or 2 years, we would be doing this, and we're going to be doing this. This is what it's going to look like over the next few years. I think you could have this as 23. Oops. I think you could have this down here. You could have this down here as 23. Oops, that's why it's doing that. Because it's the end of the screen. 23 into 24 in there, right? And then you come up like that all the way into here. And this could be 24 into 25 right here, right? And that's where I think we're at right now. I think the government sees us in here, and they're calling off the dogs by pausing the rate hikes, and I think they're done for right now until they see this start to happen. And I think in the next 6 to 12 months, this is what you're going to see. You're going to see this consolidation in the CPI, and then they're going to, in 2 months or next month or 2 months from now, when they don't raise rates again, going into the end of 23 in December, going into 1/1/24, they're going to have 2 cycles of not raising rates and holding pat. And I think you're going to consolidate through here already, and you're going to start to be on this area on a vertical rate to the upside. I think it's going to be a very interesting next 1 to 2 years, as I think where we're at in the CPI is tricking the Fed. And as the Fed's always $1 late, they're always a week short, $1 late in the wrong decade, and they're misidentifying again what's actually going on right now, just like they misidentified where the inflation was here, calling for more inflation back here, saying we weren't having enough inflation all the way from 1990 all the way up until recent. They said this inflation wasn't high enough and they wanted it higher. I believe, again, they are misdiagnosing this where we're at now, coming off peak inflation, and they're misreading the signal of what's actually happening. And as they start to print more money and start to loosen policy by lowering rates, and right now just pausing rates, I think it's going to cause the next leg of inflation to the upside. And this is where I would be looking at. If you're looking at where inflation is going to go over the next 1 to 2 years, I would look back from 1977, 78, and 79, and then 1980, where it spiked and you had a huge, almost 2.5-fold increase in a matter of a year. This is the area that I would be looking at, to be looking back through history. I think we're right here, right now. If we're putting a dot on this map, I think we're right there. And over the next 6 to 10 months, we're going to be swinging way back up to the upside. And in the next 1.5 to 2 years, we're going to peak somewhere in inflation. I think somewhere between official numbers, somewhere between 10 and 15% official inflation rate, right? That's where I think this is going. It's going to be unfortunate. And as we look at the next slide, you can see, where was my next slide at that I seen something very interesting that I wanted to look at. Consumer price index for all urban. Let's look at this one. I think this was an interesting one, and then we'll get back into some quick technical analysis on this long video. Yeah, this was an interesting. You can see underlining inflation gauge full data set in blue, right? Got up to about here. Price only, and then price index for all urban consumers, all items in U.S. city averages is the black dot. Urban, who's usually in urban areas, the poor people, lower middle class or poor, the poverty level. And that's where inflation was infected the most. And that's usually who, and the dirty little thing is about money printing. Inflation affects the poor people the most, the people with nothing. That's what inflation affects the most. And you can see that here in the chart. See that? That's the black line. They were way up here, right? And they're 7.5%. They were running at about 8.7%, when the rest of the pack, the two other ones, underlining inflation gauge price only, and then full data set measure, they were down here closer to about 6.6% inflation, right? So the inflation affects the poor people, usually in urban areas and minorities, the most, and that's a very, very tragic part of what goes on in inflation, and when government causes it, and then they blame businesses that are just trying to employ people, right, for inflation, and then they blame the workers for asking for more money to pay for the price rising caused by the government. And one of the things I think you're going to have coming soon is price controls. I've talked about it before, we'll talk about it again, but I think you're going to have price controls coming up soon. But the more critical thing, if you're looking at the trade or to see where the XRP price is going in the short term, you have to hold these moving averages right here, just like you held them back here. And if you want to kick to the upside, you have to hold that, try to make a run up here to the 51 cents, build a little of a base on the bottom part of this blue trading zone, and then you could kick all the way up to the upside. And when you kick to the upside, it's like building a tree, right? You got to build that tree, a nice, beautiful tree like Bob Ross. Yes, old Bob Ross used to say, this is a beautiful spot for a beautiful tree, and that's what XRP needs to do if it wants to grow. XRP has to grow a tree, and this is its way it can get bullish, right? But if it's going to get bearish and the tree's not going to grow because the clouds are there and it's stormy out, you're going to slip this uptrending 200-day. The 50-day in red's going to start to trade sideways, and then it's going to cross the 200-day in the daily time frame, and that's going to be a bearish cross, and the price is going to slip the 200-day moving average, start using it as resistance, or pop up here for one last time, and then it's going to slip them and come all the way back down to this 31 cents, or this major traded area between 29 and between 0.29 and 0.31, the red trading zone, which is the last line of defense, and that would be the track that you see down here. And then this would be that dinosaur pattern where you have the dinosaur. See that? Got the dinosaur, and those are bearish continuation patterns if we did form into one of those. But this is the major area. If you're trying to figure out if you're going to be bullish or bearish, you break the 200-day moving average in the daily time frame. That's bearish. You bounce off of where you're at now and hold it, and then get back above this 51 cents. That's bullish, right? And that's what you're looking at in the Bitcoin price. If we're going to, or the XRP price, if we're going to look at the Bitcoin price, you can see it's still in the same area. We've been in this rising channel where we've had our upper resistance once, couple upper resistance, lower support, a little bit of support there, and then we broke out of that pattern right here, tried to break back into it, got a confirmed breakout to the 200-day moving average. Now if you're trying to get bullish or bearish, we have our super simple probability based tracks here, one to the upside, one to the downside. But if you slip this 200-day, that's how you become bearish, and then you trade back down into this blue trading zone between 19,000 and about $16,669.69 at the bottom part of this blue trading zone. If you're trying to get bullish, you hold this area, bounce back up into this $29,000 range, try to hold on it, trade around it, and then have another pump, and then try to hold this red VP volume indicator and try to hold that area at about 30, or no, that's not 30,000, at about $26,669. You want to try to hold that, and that's how you would get bullish right there, or bearish, getting rejected by the moving average right there, right? So that's what we're looking at here in the Bitcoin price. If we do a little tour of the French, you can see, unfortunately, DGB is continuing its descent, and it's in the last line of defense. And if it can't hold this local double bottom, unfortunately, DGB is coming all the way down here to the 0.0036 level. And this is something I've been warning all of you about. that 99% of these coins are going to go bankrupt. But sometimes you just don't want to hear it, and there's only so much I can do to help you all out. But that is what DGB is looking like, as it's been a ferocious bear market. If we look at where this thing came from and where it's at current price, it's a 96.6869% collapse at current price. That's tragic, and I have a feeling this coin may go to 0.000001 cent, right? So you're gonna have to pay attention to that. That's not looking pretty. It's looking actually quite ugly, and I feel bad for people that got trapped in there based on fear-mongering, FOMOing, listening to the wrong hooligans and charlatans. But XDC is another one. We can see what we were talking about. This is down into the VP volume indicator range, and so far at current price from the top on this that I tried to warn people about, but this was another hype cycle coin, and there's nothing I could do to help you guys if you're going to buy it. This thing is down 84%, and unfortunately this XDC I feel like is going to go down 99%, unfortunately. And I think the next major move in XDC is coming all the way into here, which is this last traded range here. And using our industry exclusive measuring tool, this would be a phenomenal, depressing, pretty quick, instant 81% collapse. Come here, kitty. 81% collapse from current price, right? Just like SoFi, we tried to tell you this was a shit coin. This coin was a fleece coin, and these guys were heisters and shysters that were walking you down a huge pile, come here, of shit when they made you buy this, and this thing was going to end up down 99%, and that's exactly what happened. This coin is down 99%, and there is no hope for it. It's not coming back. It can't come back, and it won't come back. And it won't come back. It's over for the coin, and anybody that bought the hype train, the massive onslaught campaign and marketing that took place, I feel bad for you again, but this coin is over. The only thing you can try to do is swing trade, an hourly trade, trying to catch a 40% pump after the most recent 80% dump. This thing is not to be bought. Ever think it's going back up there, because that's never happening. This coin is down at 99%. The only thing you can do is try to cash in when it has, if you're trying to even play this, but this is like playing Luna Classic. It is a joke, is you try to buy that and sell that before it dumps there and ends up back down 80% in a week, right? So unfortunately, people didn't learn on that. CELO's the same thing. I told you this coin was probably going to zero, and nobody, when this thing was at 10, 15 bucks, believed that this thing could go down to below 1 cent, right? And I tried to warn you guys up in here, up in here, up in here, but nobody wanted to listen. Now this coin is down 99%, right? And it's a travesty. And again, you guys got fleece heisted and shysted all through here. I tried to warn you, but nobody wanted to listen. Nobody wanted to hear. And I don't care if it's a popular opinion and if it costs me subscribers. Obviously, my channel does not grow like all the other cryptos, because I give it to you straight. And this coin is down 96.69%, right? Matic too was a former high flyer that everybody, and this is what I have the biggest watch on. I have a fear that in 2023 this coin is going to have a 80 to 90% crash, right? And it's already, from its two highs, down about 75% from its all-time high. So that's still pretty good, but I have a feeling that this, at current price, we're going to end up, unfortunately, down into here. And I have a very, very big feeling that this is coming down into this range for some reason. I have a gut feeling that this is where the price is going in Matic. It's going to catch the entire Matic sphere off guard when the price could actually come down to 0.0. And why does this look like this? This is hideous. 0.0415, and that is a crash of better than 80% from the current price. And that is something I am absolutely watching for, and I'm absolutely concerned about that. Nobody in this audience, just like XDC, DGByte, CELO, QUANT, and all the rest of them, never thought it could happen. I think you could have something catastrophic like this take place, and the price ends up down here in Matic, and nobody's going to understand what happened, and they're going to be fleeced, heisted, and shysted. Peace and love. This has been too long to my beautiful, growing, loyal audience.